The excitement surrounding Apple's upcoming iPhone 17 is reaching a fever pitch. But does this mean its stock is worth buying right now? As one of the most iconic tech companies in the world, Apple continues to dominate headlines, not just for its innovative products, but also for how its stock is performing on Wall Street. With several key developments unfolding, it's no wonder investors are keeping a close eye on AAPL shares. But here's where things get interesting. Apple's stock has been quietly climbing higher recently as anticipation builds for its annual fall product lineup. This includes the much-anticipated iPhone 17 series, which promises to bring some intriguing updates. On August 8th, Apple achieved something significant. Its stock price moved above the critical 200-day moving average for the first time since March 10th. Just days earlier, it had crossed another technical milestone by breaking through its 50-day moving average. These bullish signals came after President Donald Trump announced that Apple would be exempt from most tariffs due to its investments in U.S.-based manufacturing facilities. Despite these positive indicators, Apple's stock dipped slightly in today's trading session, closing at $230.89, down 0.3%. However, analysts who track chart patterns note that the stock remains within a consolidation phase that has lasted approximately 33 weeks. According to IBD market surge data, there's a potential buy point set at $260.10 if the stock can break out of this range. For novice investors, consolidations like this often indicate that a stock is gathering strength before making its next big move. Yet, lurking over Apple's stock is an unresolved legal issue that could have major implications. A pending federal court decision regarding Alphabet's Google threatens to disrupt Apple's highly profitable partnership with the search giant. Currently, Google pays billions annually to remain the default search engine on iPhones, and any ruling against this arrangement could weigh heavily on Apple's revenue streams. Analysts expect clarity on this matter by the end of August, adding urgency to the situation. The spotlight now shifts to Apple's rumored iPhone 17 launch event, slated for September 9th. If history serves as a guide, the new devices will likely go up for pre-order on September 12th and hit store shelves on September 19th. Rumors suggest that Apple may unveil a super-thin device, potentially dubbed the iPhone Air, alongside incremental improvements across its standard and Pro models. Expect enhancements such as faster processors, better cameras, sharper displays, and other subtle upgrades designed to keep loyal customers upgrading their devices. Meanwhile, competitors aren't sitting still. Samsung recently made waves with its latest lineup of foldable smartphones featuring massive screens. Similarly, Google is preparing to showcase its own folding Pixel phones during an upcoming product launch. While rivals embrace foldable technology, Apple appears content to hold off until late 2026 before entering this space. But here's the part most people miss. Does Apple risk losing market share by waiting so long? Or does its brand loyalty ensure continued dominance regardless? Another pressing question revolves around Apple's approach to artificial intelligence, AI. The company has delayed the rollout of its AI-powered Siri Assistant and related Apple Intelligence features until next year. Some analysts worry that competing Android-based smartphones equipped with advanced AI capabilities might tempt Apple users to switch platforms. Interestingly, Melius research analyst Ben Reitzes argues otherwise. In an August 8th note to clients, he stated, "Luckily for Apple, its iPhone base doesn't seem to care about the Siri AI delays, and we see no evidence of real switching." He maintains a buy rating on Apple stock with a target price of $260. Looking ahead, Apple reportedly has ambitious plans for 2026. In addition to introducing its first foldable iPhone, the company aims to expand its ecosystem with groundbreaking products like smart glasses, AI-enhanced AirPods, updated Apple Watch models, and even a rumored smart home hub. Such innovations could reignite investor enthusiasm, especially if current concerns persist. However, not everyone is convinced that Apple represents a surefire investment opportunity. KeyBank Capital Markets analyst Brandon Nispel recently reiterated his neutral stance on Apple stock, citing valuation concerns and risks tied to the ongoing Google antitrust case. While the stock is making up for year-to-date underperformance given recent stronger trends and growing excitement around AI, he wrote, "We're concerned expectations are far too high." Morgan Stanley analyst Eric Woodring offers a contrasting perspective, suggesting that all Apple needs is a strategic AI partnership to unlock its true potential. In our view, Apple is one potential AI partnership away from breaking out, he remarked in a recent note, maintaining his buy rating with a price target of $240. Adding fuel to the debate, Warren Buffett's Berkshire Hathaway disclosed last week that it trimmed its substantial stake in Apple. Buffett reduced his holdings to 280 million shares at the end of Q2 from 300 million at the end of Q1, marking a decline of over 2/3 since Q3 2023. Is this a red flag or merely routine portfolio adjustments? That's up for interpretation. So, what do you think? Does Apple's cautious strategy signal confidence or complacency? And should investors view the stock as a golden opportunity or tread carefully amidst lingering uncertainties? Share your thoughts in the comments below. Let's dive into this discussion together.